Okay, for this video lecture, so we are now in the substantive procedures to audit the shareholders' equity accounts. Okay, so here are the following substantive procedures that can be performed by the auditor. Okay, for auditing shareholders' equity balances. First, the auditor can confirm the shares authorized, issued, and outstanding from the independent registrar and stock transfer agent if this is applicable with the entity, because normally some entity engage the service of an independent registrar or stock transfer agent to manage the transactions related to their shares of stocks. So these entities are considered to be independent because they are not the employees of the entity. Okay, so meaning data or information or evidence coming from them are considered to be more reliable. So for large clients, especially, usually they engage these types of services to manage their stock transactions. Okay, for small clients, which do not enter or employ this type of services, so they may refer to the documents like registration from SEC or the company's bylaws or other documents that may contain the number of shares authorized, for the number of shares issued, so they can refer from the stock certificate issued to the shareholders. Okay, and then reconciling these items to determine any unissued or outstanding stocks. Okay, so the primary responsibility of the registrar, this is to verify that the stock which is issued is properly authorized. So again, only those authorized number of shares should be the maximum number of shares which the entity should issue. If they want to extend or increase the number of authorized shares, then they should apply for it from the proper authority and with the approval also of the board of directors. So stock transfer agents, on the other hand, they maintain the detailed stockholders record. So this is carried out for the transfers of the stock ownership. So here, the stock transfer agents are responsible for recording the details of the transfer of ownership or the issuance of the stocks to the shareholders. So the number of shares authorized, issued, and outstanding will usually be confirmed to the auditor directly by the registrar and stock transfer agent. So again, since the auditor here uses the confirmation procedure, so he will be the one who will send the confirmation request and the responses will be sent directly to the auditor. Another procedure is the auditor can also reconcile the stock certificate book as mentioned to the transactions which are recorded in the general ledger. So again, this is for the client which act as their own stock registrar and transfer agent. Okay. So a stock certificate book, so this is where the shares issued are summarized. So normally, the entity will use the stubs. Okay, this will remain after a certificate has been removed. This is the other part of the stock certificate which remains in with the entity. Okay, that also signifies that a portion of certificate was issued to a particular stockholder. So the certificates for outstanding shares are held by the shareholders. If there are cancellation of certificates, this is in the case for the repurchased share or received when a change of stock ownership occurred. So these normally are held by the client and can be inspected by the auditor to determine and verify the outstanding shares issued. Okay. Outstanding shares, meaning these are shares in the hands of the shareholders, because there are shares which are issued, but these are repurchased. These are treasury shares, okay, held by the entity. So they are not part of the outstanding shares. Okay, so when a stock certificate book is used, here the auditor can reconcile the outstanding shares, par value, and other details that can be taken from the certificate with the stubs, okay, which remains in the book of the entity. Okay, so aside from that, the auditor can also do the vouching. So again, he can start from the records of the entity and then following through the document or source documents. Okay, for the entries affecting the retained earnings. Okay, especially that retained earnings, this is where the amount of profit and loss are closed, and other related income and expense, and shareholder equity accounts, they are normally recorded. Okay, and especially that in the retained earnings, there are restricted and unrestricted portions. Okay, so here the auditor will determine the validity of its existence and if there any approval for such transactions related to these entries. Another procedure is the auditor can review also the disclosure that is required for the shareholders equity account, okay, based on the requirement in the standard. Okay, another is the auditor can also review the articles of incorporation, bylaws, and minutes, okay, of the entity for the provisions of any relating transactions to stock option and any dividend restriction. This is very important because this will affect also the number of shares outstanding and the balances, okay, of the shares, okay, in the shareholders equity accounts, and to determine and um, disclose also the reasons why the entity will restrict the distribution of dividends, okay, because there are some rules which the entity should follow, especially in the distribution of dividends to their shareholders. Okay, so if that is valid. Another is the auditor can also vouch transactions and at the same time trace the receipt of funds from the proceeds of the issuance of shares to the bank account and also to the cash receipts journal where these transactions are normally recorded, okay, to verify that these funds were properly received, or in the case of disbursement for the payment of any repurchased shares or dividend, okay, made by the entity. Next, the auditor can also review the minutes of the board of directors and or shareholders meeting. This is done to verify that the stock transactions and dividends have been properly authorized. Okay, so in this case, these transactions normally are one of the discussions that should be made by the board of directors and shareholders. Okay, the approval of which is on the part of the board of directors and even the shareholders. Next, the auditor can also inquire from the client's legal counsel to obtain information relating to any unresolved legal issues related to stock transactions, okay, or investment with or from the shareholders. Okay, this is to determine if there are any fraud that may exist which may affect the fairness of their financial statements and as well as the balances of the shareholders' equity accounts. Next, the auditor can also review the articles of incorporation and bylaws. So we have already mentioned this, okay, in the previous slide. Okay, for the propriety or validity and accuracy of the equity transactions, they are properly approved as well. Another is the auditor can also perform analytical procedures. So again, using the minutes of meetings, book certificate, and other documents related to transactions with shareholders' equity accounts. Another is the auditor can also inspect the Treasury stock certificates. This is done to verify that the transactions have been completely recorded and the client has control of such certificate, because this is treasury share, meaning stock which are issued and outstanding and are repurchased and held, okay, by the entity. Okay, since they repurchase it, it should be held by the entity and not by the other parties. Another is the auditor can also do some maybe recalculation or inspection to determine if the amounts that appear on the FS agree with that of the amounts from the general ledger. Because again, as what we have mentioned before in the asset and liability accounts, whatever amounts that is calculated from the general ledger is usually what is forwarded in the financial statement. So it has to be accurate and free from errors. Okay, next, the auditor can also vouch the dividend payments to verify that these are paid. Vouching means the auditor will look into the records of the entity related to the payment of dividend and looking for the source documents for the payment of such dividends. And lastly, the auditor can also recalculate the treasury stock transactions if these are accounted for properly, accurately measured, and completely recorded completely, or meaning all of those transactions related to the treasury stocks are recorded in the books of the entity. Okay, so to continue with the substantive procedures for the shareholders' equity, so we also have the substantive procedures to audit the revenue or income, okay, specifically for these items. Okay, for the revenue or income, so these are the following, or the list of the typical substantive procedures that the auditor can perform. Okay, first, the auditor can verify the revenue or income accounts in relation to the audit of the asset or liability account. Because in this case, revenue can also be simultaneously audited with the accounts receivable or cash. Okay, in terms or in the case of credit sales or cash sales. Okay. I think liability account is related to expense. Okay. Or another thing is liability can be related to this account if, for example, the customer has paid in advance. Meaning, in this case, the auditor has the liability to deliver the goods or to perform the services, okay, paid for by the customer in advance. Okay, so once these are perfected, meaning the goods were already delivered or the services was already performed, then the entity can now record or recognize revenue or income. Okay. Next, most revenue or income accounts are verified in conjunction with the audit of assets, okay, or liability accounts, as discussed also or mentioned. So we have here an example. Okay, for example, in the statement of financial position account, okay, the auditor will audit accounts receivable. So at the same time, he can do the audit for the sales, which is coming from the statement of financial performance or income statement account. For the notes receivable, okay, if the auditor audits this account, he may also simultaneously audit the interest income. For the investment, he may also simultaneously audit the interest, dividend gains, or on sales, which are the income statement accounts. Lastly, for the property, plant, and equipment, which is an asset account, the auditor can also simultaneously audit the rent gains or gains on sale of such PPE, which is under the income statement accounts. This is how the auditor can do the audit for both the income statement and statement of financial position account simultaneously. Okay, for other types of substantive procedures, so the following can be performed by the auditor. Okay, first, he can perform analytical procedures, okay, related to income or revenue accounts. So again, using the non-financial data. Okay. Next, he can also obtain or prepare analysis of the selected accounts from the revenue or income transactions. Okay, so analysis of, like schedules of the proper period in which the revenue can be recognized, okay, and so on. Another is the auditor can also vouch, okay, meaning he will select transactions from the books of record and determine if they have and determine, I mean, using the source documents, if they represent proper revenue or income recorded for the proper period. Okay, so those are the specific substantive procedures to audit revenue or income. So lastly, this is the related account also under the shareholders equity expenses. So these are, on the other hand, the specific substantive procedures to audit the expense account. Okay, so in this case, the auditor can perform verification of expense in relation with the audit also of any asset or liability. Okay, so we will have a summary later on to discuss what type of item from the asset account which the auditor audits and simultaneously audit as well the expense account. Okay. Another is most expense accounts verified in conjunction in conjunction with the audit of related assets or liability. So that's why the auditor can verify it along with his audit on the related assets or liability account. Okay, so this is the example of what we are talking about, where the auditor audits an asset or liability account and then simultaneously audit the expense account. Okay, for example, the auditor will audit the accounts receivable. So in this case, simultaneously he will verify any uncollectible accounts which is considered to be bad debts or should be written off from the AR. Another is if the auditor audits inventories, he can simultaneously audit also the purchases, cost of goods sold, and payroll. Okay, so these are a form of expenses of the entity. Next, if the auditor, for example, audit the property, plant, and equipment, so he will simultaneously also audit the depreciation, repairs, and maintenance expense. And for the accrued liabilities, the auditor will simultaneously audit the commission, fees, product warranty expenses. So this is how the auditor will perform the substantive procedure to audit at the same time an asset or liability account together with the expense account. Okay, another is the auditor can also perform analytical procedures related to expense accounts, again using non-financial data to corroborate with the financial information related to these transactions. And he can also prepare analysis, just like in the audit of revenue or income. Okay, like the analysis of the allocation of depreciation, interest expense, and so on. Okay, or amortization table. Okay, and lastly, the auditor can vouch selected transactions which are related to expenses, meaning he will select transactions recorded from the books of the entity and then going through the source documents to verify its existence, authorization, valuation, measurement. Okay, so those are the different substantive procedures to audit the accounts under the shareholders' equity.